The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin, Jeong. Clean energy investment is entering a new phase marked by geopolitical tension, evolving industrial policies, and surging global demand from sectors like data centers. Now, while Europe may currently be insulated from the direct impact of tariffs, the clean energy supply chain's deep reliance on China introduces growing uncertainty for investors. So how should investors be recalibrating their strategies? And as clean energy becomes central to powering digital infrastructure, what new investment themes are emerging? Well, to find out more, joining me now is Joost Bergsma, who is the global head of clean energy of Nuveen Infrastructure. Joost, welcome to the show.
Hi, good afternoon. Thanks for having me.
Thank you so much for joining us. Joost, how are tariff risks changing the calculus around clean energy investments at the moment?
Yeah, good question. They actually can have quite a bit of an impact, particularly for new build projects. I think with clean energy, what you have to keep in mind is that the upfront costs for these projects are really what drives all the cost. Keep in mind that the running cost, you don't have to pay for the wind and the sun, are almost zero. So everything about new build is around the upfront costs. So if countries start to impose tariffs on solar panels or tariffs on equipment for wind, that really changes the dynamics and returns on new build projects quite significantly.
Right. Are you seeing a shift in the types of clean energy projects that are getting funding due to these macro risks?
For sure. So it is a heavily regulated sector, clean energy. The power sector requires government support in some places, but also you can't just add a new wind farm to the grid. So when governments start to change policies, it does definitely have an impact on the sector. So what we're seeing is that offshore wind has started to become a bit more expensive, but solar and batteries, they are the biggest segments worldwide in terms of investments. They are still growing quite significantly. The other thing that we're seeing is, of course, with the new regime in place in America, is that we are starting to see American investment in clean energy tapering down a little bit, particularly in offshore wind, whereas Europe is actually continuing quite strongly to make further investments in clean energy.
Well, on that note, decisions made by Donald Trump during his first presidency have shown that reshoring can be effective. Now, Europe is a bit behind when it comes to reshoring. So will reshoring ultimately open up a new asset class or a niche market for infrastructure investors in Europe?
Yeah, sure. Definitely. I think these sort of volatility also creates new opportunities. You do have to separate it a little bit out by segment, in the sense that the wind production chain is actually quite local. If you think about it, these towers of these wind farms are 140 meters plus. The blades are also 70 meters. So they have to be produced quite locally to the end use point. You're talking a radius of 200-300 kilometers. But solar is completely different. The solar industry, production of solar panels up to 15 years ago, this was done in Europe. But that has all shifted out to China, to Vietnam, and to Korea simply because of the economics. So we do now expect to see some reshoring of that production capacity back into Europe. But of course, the cost to make a solar panel, the key cost components are energy and labor cost. Those are significantly higher in Europe. So it will come at a different price tag to reshore these solar panel industry back to Europe.
Then how should investors weigh the upfront cost of reshoring against its long-term strategic value?
Yeah, look, so clearly this is a tricky one, right, for investors, because on the one hand, we know that Europe will need more clean energy. Europe is still committed to the green agenda, but more importantly, energy security. It is critical to be less dependent in Europe from gas and so on that comes from either Russia, but also from the USA. So indeed, there is a strategic value to having more clean energy in Europe, given the energy security agenda. But as an energy investor, how do you take advantage? How do you navigate this? I would say look for some signposts. So, for example, it is critical, I think, for the government to play a role in reshoring. So do you see certain governments offering support tax breaks for these? But also, for example, look at the country dynamics, right? Some countries in Europe have higher power prices historically than other countries. Clearly, there is more fat, so to say, if you have a higher power price country such as Italy than if you have a lower power price country like France. So those are some of the signposts, I would say, as investors navigate this uncertainty to look for.
Well, you've mentioned that demand will likely outpace the negative effects of removing incentives. How should investors then navigate the risk of, fluctuating policy support like tax credits while betting on long-term demand?
Yeah, look, really good question, of course. So again, clean energy, I know it sounds a bit maybe mystifying and it is a bit niche from people, but at the same time, I think like any investments, look at the fundamentals. So if you're looking to invest in new build projects, just really look at what is the experience of the contractor building this new wind farm. Are these projects what we call in the industry wrap projects? So in essence, that means that the contractor takes the cost increase risk, and as an investor, you don't take the risk. So well-structured projects. Again, I would say look at power prices. So some countries, Europe is not so well interconnected. For strategic reasons, countries prefer to have their own independent country supply. So that means different power prices in different countries. So power prices, like I said, in Italy, there's a lot more room to for tariff increases to absorb in Italy with a higher power price than Spain. And the final point is, again, pretty obvious if you're an investor. Diversify. Just don't put all your money in a single technology or a single project.
Well, regardless of what happens to tax credits here, I mean, there is a race between the U.S., China, and Europe to see who can roll out data centers the fastest, right? So with data centers driving rapid energy demand, are there new investment theses or themes emerging around grid infrastructure or behind-the-meter solar?
For sure. Yes, absolutely. So, look, clean energy has the advantage that it is actually quite cheap and it's also quite fast to build, much faster than gas or nuclear. And what we're seeing in terms of new themes is that these hyperscalers try to get a fully integrated, fully off-grid, as you call it, supply of energy. This supply of energy needs to be a combination of wind and solar and batteries. So it can't be single technology. Reason is quite simple, is that wind and solar, of course, work at different times of the day and different times of the season. So you're starting to see these combinations of wind, solar, and batteries, potentially with a backup of some gas-fired and so on. This is where hyperscalers are actively looking to source their power.
Well, then what kinds of projects do you believe are best positioned to deliver strong returns over the next, say, 3 to 5 years?
Yeah, look, so I think it's all about scale. So I think investors should look for platforms where you have large aggregators of wind and solar that really can drive scale. The reason why scale is important, they then can really reduce build cost of these new projects, but also in terms of contracting with these hyperscalers to sell their electricity, you're in a much stronger position if you have a very large scale. So look for large scale type platforms. I do believe that offshore wind will bounce back in Europe, not everywhere, but I think in Europe, because we're so densely populated, we got to do something more in offshore wind. And down the line in Asia, particularly important, floating offshore wind. Again, countries like Japan and Korea that are just don't have a lot of space because of the mountains. They have to go offshore. So I do think that south sector, the floating offshore wind sector, will bounce back.
Okay. Meanwhile, key players in offshore wind have been very vocal about the fact that the current situation is unsustainable. So what's the current investment outlook for that sector? Should investors be cautious?
Definitely be a bit cautious here. So I do think that, so what has happened, just to give everybody a bit of background, is that we saw for the first time commodity prices rising, and steel is a big driver in terms of cost for offshore wind and onshore wind. And then also the projects are bank financed. So doubling of interest rates in the last couple of years has hurt this sector. Power prices are also higher than, let's say, 5 years ago, but they're not high enough to absorb all these cost increases. So the margins are a bit squeezed. What we need is that we need to get governments, I would say, to just be a little bit supportive to help these offshore wind players through the cycle, through these couple of years. We're starting to see interest rates declining. So as I said just now, I think I do believe that the offshore wind sector has a role to play. These are large-scale projects that can really drive a lot of supply. I think the sector will bounce back, but more in Europe. America, I'm not so comfortable.
So you mentioned that you think that the sector will bounce back. So are there any specific markets or technologies within offshore wind that still offer solid investment potential despite the headwinds?
So I would say that country-wise, I think countries in Europe, the Netherlands, the UK, Belgium, we see governments really stepping back in to support the sector. So the UK government, that is a bit more left-leaning here, the Labour government, has actually offered long-term incentives for the offshore wind, and the sector has reacted positively to it. The Netherlands is having a hydrogen agenda, and offshore wind and hydrogen are a good combination. So there are certain pockets where I would say, indeed, countries where you can still invest quite nicely into offshore wind. Also, there is a sort of service sector around offshore wind. A lot of technology, drones, for example, data analysis, super important to drive the cost down. So there are countries and investment themes that investors can look out for.
Overall, Joost, what are the top takeaways you would offer to clean energy investors in this current environment of geopolitical tension and supply chain volatility?
Sure. Look, so the good news for investors is that there is actually quite a range of operating projects, so projects that are already producing cash flows and electricity today. This sector has been around for 15 years, so if you want to be conservative, go for more operating projects. They're less prone to tariff changes, because these tariff changes hit, so to say, a bit more construction projects. So that is one. Secondly, again, diversify, right? Don't put all your eggs into single technologies, but look for sort of solar, wind, and offshore wind, and batteries. Batteries is a big investment theme that is really going to accelerate quite a lot. But also don't forget that what we do in clean energy is electricity. Electricity is not going to go out of fashion. It is a super important commodity. So it is actually quite a defensive sector.
Definitely. And before we let you go here, are there any under-the-radar trends or risks that you think investors are currently underestimating in clean energy?
So not so much risk, I would say, but there are some things that are quite interesting. I told you that hyperscalers at the top end of the market are trying to sort of integrate, have their own sort of power supply. You see the same thing a little bit emerging here at the, domestic level. So you have a theme now called sort of balcony solar, where in essence you just clip a solar panel onto your balcony and therefore also go off grid. So these are quite interesting themes, I would say, where you start to see more really distributed energy where the supply is very close to consumption. These are quite interesting things to watch for.
Right. Well, thank you so much for your time and your insights today.
Great. Really good to be on the radio, and have a great day.
Thank you. That was Joost Bergsma, who is the global head of clean energy of Nuveen Infrastructure. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.